Welcome back to the channel. My name is Brad. Today we're going to look at SPYT, and is this playing the roulette table, or are the odds actually stacked slightly in our favor? Let's find out. Let's dig into it. SPYT, it's a cover call strategy, but they sell minimum amount of calls, and they're actually call spreads. This interests me because on a call spread, there's limited downside potential and it's only going in one direction. This is a bear. So what they're actually looking for is a negative day. And we'll get into that. We'll get into what they're actually looking for. The top holdings, this was on Monday, I do believe. They hold IVV, which is BlackRock's iShares ETF. They do this. They originally started with SPY and then they moved to IVV because of the cost. Their cost of holding it is cheaper with IVV. You can also see that they have some government bonds, obligations there, and they also have two calls. The lower call, the call for 55.50, is the one that they sold. They bought the C55.65 at a lower price. And the actual gains is the difference between the two. So you take that 17.25 minus the 9.10 to get what they actually got paid for this call. So is this really like a roulette table? If the call expires above 55.50, then it's kind of a wash, but there's a gray area, and we'll get into that. If the price drops below 55.50, it's a win. Here's a question for everybody. Pause the video, put below how many days on average in the last 5 years has it been a red day where the S&P 500 went down. Don't cheat. Don't look below. Don't forward the video. How many days were red days? Put your answer below. We're waiting for you. Put your answer below. On to the video. So how many green days and how many red days are there in the S&P 500? Wouldn't that be nice to know? There are, on average, 9 red days per month, right around 11 green days per month. A green day is a wash. A red day is a win. But there's a caveat. Just like the roulette table, there's 2 green zeros, 1 0 and 1 00. If you ever played roulette, if it falls on those greens, it's a loss. If it lands on the black, and I'm going to call black in the black for a green day, then it's going to be a wash. If it's a red day, if it lands on red, yay, we win. This is how they're going about it. So black, it's a wash. Green, we lose. Red, we win. So how does this actually play out? The other day they sold it for $55.54. If the price appreciates all the way up past that $55.65 and it closed at $5,900, this ends up being more or less a wash. Actually, on Monday's trade, they actually made a little bit of dollars on this because there was some discrepancies because they actually sold it slightly in the money, but there was some discrepancies in the options trading, and they actually made a few dollars. Keep in mind, it's only a very small portion. Small portion being less than 0.25% of the actual holdings. So in this, if you take the differential between C55.50 and 55.65 and come up with that's about a 0.2 in that spread, if the exchange goes up by 1%, you're going to see SPYT go up by 0.8. They're going to capture that upside because this is a very limited amount of options that they have out there. If the trade would have gone, hey, closed below that 5,500, this is a win day. They keep all the options. So the call option that they sold expires worthless. The one that they purchase expires worthless. They keep the premium. They keep the difference between what they sold and what they bought. They keep that. So we're looking for 9 red days a month. Looking at their math, it looks like they can live with 7 days a month, which is interesting. The danger zone, the double green zeros on the roulette table, if it closes in between the two, the bottom call is still good. We're going to lose money. We actually wanted it to go above. If it goes below, we win. If it stays in that middle, we lose. So the dividends have been very consistent, right around that 20%. This is dating back to when they started paying dividends. They paid it on a monthly basis, close to that 20%. No complaints there. Price return, they're breaking even, right? We had the big dip back in August. They've made the comeback. Remember, this should be very close or closer to the SPX because it's only a very small portion that they're selling on options. I'm a little bit concerned that it's not a lot closer to the SPX. Now, on down months or in a bear, this is actually going to perform fairly well. And if they see more red days than green days, this is also going to perform very well. So keep that in mind. Total price return, very close to SPYT. They're still giving that 20%, but that's, again, looking at how Seeking Alpha does their math. This is only taking in the distributions. It does not count as reinvesting the distributions. So keep that in mind, that this is only the distributions plus the price action gives you what the total returns are. I looked at drawdowns, and I, of course, compared this to our round hill and the SPX or the Vanguard S&P 500. As you can see, it in the downturn, this stayed positive because there's going to be more red days, meaning they're taking in more income. So this is going to be a bearish play in a bullish market. But on the average, if we look at the law of averages, we should get about 9 red days a month. Portfolio income, again, I'm taking this against Round Hill, our favorite QDTE. It paid $52.35. Defiance paid $41.99. But the Round Hill XDTE only paid $34.41, same time period. So for a SPY or a S&P 500 fund, this pays better than Round Hill, but we're also looking for those green days being high. We're looking for the red days being low. We don't want to get caught in that middle spot. And let's look at annual returns. We're slightly below the S&P 500, but we are keeping pace. And for a 20% yielder, not bad at all. Does this fund deserve a spot in our portfolio? Not financial advice. The odds are slightly in our favor. Good green days, we take a small hit. Red days are winners for us. Middle space, losers. I play it with a minimum amount of money. I do not have a large holding of SPYT. I like how it does slightly different call spreads than everybody else. And if it didn't do call spreads, I would not be in this fund. I like it because I know on red days, I'm earning some income. Green days, I'm still getting that capital appreciation. All right, middle ground days, hopefully they are far and in between. Hopefully this explains what SPYT is and what SPYT is all about. If you like this content, please feel free to like and subscribe and leave a comment below.